Well, I think the big conversation there is to just put gold back on the map for a lot of investors. I mean, we've had conversations coming into 2025, 2024, where a lot of clients, a lot of investors were still kind of looking at it as a less interesting asset class. And of course, somebody sent me the Bloomberg chart yesterday of foreign central bank holdings of treasuries versus gold going back to the 80s. And for the first time since the mid 90s, foreign central banks are now holding more gold than treasuries. Wow. So this is a secular tailwind. This is a powerful shift, and it goes back to the kind of the roots of Van Eck, Austrian economics. You know, when the fiscal deficits and debt gets too high,
right.
when, monetary machine goes off the rails, gold is the safe haven.
Quick aside, my book of the fall will be Cass Sunstein on liberalism. Cass Sunstein writing up with love for Hayek and the Austrian School of Economics. Nobody saw that coming. We'll do that with Cass Sunstein here in the coming weeks.
Ben, looking at your notes here, gold has doubled since 2023 and could double from here over the next 5 years. What's going on there?
So again, I think the big thing to keep in mind there, and we were kind of pounding this table on gold, not because we're gold bugs, but we just saw asymmetry, structural asymmetry in that trade. And I'm reluctant to even reference it as a trade because, again, we think it's kind of a secular change in the world monetary order. In many ways, it's kind of the other side of the bond vigilantes coin. Actually, Tom, you on the show a couple of months ago said, is the gold market sending us a signal? And it absolutely is, and it's the same signal the bond vigilantes are sending us. And unless, when you look at kind of G7, it's not just America, what's going on with long yields across the G7 nations, all of that really argues for gold as a safe haven. There's a lot of factors there at play, not the least of which, too, is I think a lot of the shine coming off the dollar. And we have obviously seen the dollar come off of a 12 or 13-year bull run. But the guest from Macquarie, Dr. Wiseman, I think summed it up very perfectly, where he talked about, dollars now moving from ordered liberty to managed chaos. And I think even that's part of people now looking at US dollars no longer as the safe haven that they once were and finding refuge in gold.
How about silver? I'm just looking at silver on my GLCL, Global Commodities Price chart here. Function on the Bloomberg terminal. It's up 40% this year.
Silver is interesting because, silver, and the Van Eck guys will tell you this, has always been kind of interesting because there's a more robust industrial use case there. And I think, in particular, if you look at the silver to gold ratio, which is, one of the dozens of indicators we look at, it was, comparatively undervalued relative to gold, historically. So there's kind of a technical basis there for an uplift. But I think also equally interesting is when you look at a lot of the Chinese demand for solar panels, which they've got Xi Jinping has big plans for solar. These are new types of solar panels that are going to use more silver going forward. So I think that industrial use case now also has a bit under it. But again, when when silver and gold start moving in tandem like that, that's also the signal, that the bond vigilantes are sending us that this is inflation safe haven.